Hello, traders. Welcome in. We're a little bit early, but I want to do a quick sound check. Hopefully you can hear me. Can type in, and you know how to do it in the question area. Maybe type in hey or yes, or there's a dashboard on the GoToMeeting or a control panel. Yes, okay, I'm getting some yeses. Thank you guys. Was letting people as people trickle in here. We're going to get started, but just wanted to make sure you can hear and should be able to see a screen that says supply and demand trading strategy. GoToMeeting is nice. I have a little preview screen, so I'm very confident that you're seeing my screen. But I like the fact that we can chat back and forth. In fact, I'd like to make this as interactive as possible with everybody able to ask questions if you need to. We've got some folks paying attention uh, to these questions, so if I don't answer it, somebody else should. And so we'll get started just a minute as folks come in. While we're getting started, if you want to, I'd love to hear. I do this every time, and it's mostly for me, my personal quest. I'd love to hear where people are trading from, and I'd love to do a whole inquiry on everybody, but that's a little intrusive, and no one needs to share anything. But if you want, if you feel like I said, you got to find the question section in the GoToMeeting control panel, open that up and type a question in there, and sometimes it's a pain in the butt and you just want to pay attention to the webinar. But I'd love to hear where you're trading from. That's always fun to hear where people trading from. So if you want to just type in where you're trading from. Like I said, what I'd love to know is where you're from and how long you've been trading and what you'd mostly trade. I mean, if you trade anything I say today will apply to anything that can be put on a chart, but just it's fun to hear with people, mostly futures, mostly stocks, all options, all crypto, whatever you trade. Yeah, so we got some options. Nice. And Florida, love to hear where people are from. Apologize if you hear me take a couple microphone breaks. It's me grabbing a drink. I've got a little bit of a cold I'm fighting here. So hopefully that won't be too obtrusive. But let's get started. I want to respect your. I got to answer here. I'm from England. I trade anything that moves, so I like that. That's a great. I'll trade. That's kind of how I am. Although, being honest, most of my trades are 99% of my trades are in futures market, and 99% of those trades are in on ES. So kind of just one trick pony, but I appreciate you guys being here. So let's get started. Let's get going here. I mean, introduce myself. I'm Dave. I'm BuySide Global lead trader here at BuySide. This is the BuySide Global webinar that you signed up for. Appreciate you being here. I'm gonna make it worth your time. I'm gonna make it worth if you've been trading for a minute or been trading for just a second or two. I hopefully make it worthwhile and have it be productive. And again, I'm keenly grateful that you are here, and we appreciate your time coming by to see what we have to offer here. This is obviously the here to talk about the trading bot. I'm excited about that. So we're going to get to that. But so let's get through the usual disclaimer. Make sure you understand trading is risky. we talk about that a lot. You know how sometimes I've had people call me, and maybe this is too soon or too not the right appropriate time to share this. But people call me and they just want to either think about buying our product or have just bought it, and they'll say that, hey, I just have X amount of dollars. I need to make enough living to live off of. I've got this happen, and oftentimes if that's the situation, it's too risky for the person. You might as well. It'd be like if they told me, hey, I've got to pay for my back surgery. I'm going to go to Vegas with my life savings. So I don't want you to do that. But understand that trading is risky. Don't trade the money you can't afford to lose. Please understand, I'm not a licensed broker. Anything I can say shouldn't be construed as investment advice. So we just don't want you to trade the money you can't afford. Change your horizon, your retirement horizon, or your daily living. So we got through that, which we follow CFTC Rule 4.41. So there's our information. If you don't know about us, that's us, buysideglobal.com. We'll talk about us in just a little bit, but you can go to our website. It has a lot more information, obviously, about our indicators. There's videos that we've made there. There's our email, info at BuySide Global. You can shoot an email there. You can shoot an email to me, Dave at info at, it's just instead of info at BuySide Global, it's Dave at BuySide Global. And then there's a phone number you can call if we can. It's not a, it's not a staff of 25 monitoring it in 3 shifts during the day throughout throughout 24 hours. But if we can answer that, we will, and take your questions that way as well. So again, we want to make sure you're able to get a hold of us and reach out to us if you can. So yeah, Dean, appreciate your comment. We're gonna be talking about that. We can help you with that for sure. I got a good comment there. And so we talk about who we are. BuySide Global, we do advanced order flow software. Basically, that our software is based on order flow volume. That's what runs the market. We'll talk about that. But we do artificial intelligence-based alert indicators, and we also provide trading strategies for active day traders, so you can make smarter entry and exit decisions. Of course, started in 2014, so we've been around for a while, and we partner exclusively with NinjaTrader. We have extensive research and development. Our testing and revisions have gone, and we develop all our BuySide Global software. It's kind of a balance between traders and software developers. A lot of traders aren't software guys and coding guys, and a lot of coding guys aren't traders. So we have a good combination of both. Just want to know kind of who we are and how we got started doing what we're doing. So here's our agenda. We're going to talk about what supply and demand zones are and why that's important and how to trade those. I'm going to give you 3 supply demand trading strategies that have nothing to do with BuySide Global or anything you can do. These are just trading strategies you can use to use supply and demand trading strategies. And then we'll talk about how to automate using the trading bot. And then there's literally the best software I've ever seen for BuySide Global traders. So yeah, got a question here about, in fact, that's a good time to talk about NinjaTrader. So we selected NinjaTrader because they are a great platform for everything that we want to accomplish as far as, being able to use these indicators on it, being able to interact with it, peacefully without too many hitches. Their folks on NinjaTrader side are very good to work with as far as us goes. And so we've partnership with those guys. You're going to have to pay for data. No one's going to give you time data, timely, up-to-date instant data for free. That's a valuable commodity. That's like saying, why do I have to pay for gasoline? It's expensive. So the data costs money, but if you don't have NinjaTrader, you can download a free version of NinjaTrader, and you could use our indicators. And then let's say I only want to use Thinkorswim, or I only want to use any of those other 1,000 platforms they have out there. I only use Sierra Charts, or I only use TD Ameritrade, any of those other platforms. You can use our data and information to take a trade on another platform. So just, it doesn't hurt to have, if somebody else, I don't have any access to NinjaTrader, yes, you do. They're free, but you do have to pay for data just because it's a valuable commodity. So again, excuse me, my little throat here. So again, we'll get to the offer. So what are supply and demand zones? Let's get to it. Let's get into this. So it's also called support resistance. It is concentrated areas of sellers and buyers wanting to enter or exit trades. If we were taking notes, if this was my classroom, I'd have you write this all down. And you don't have to. I mean, you can take a picture of the screen if you want. But just understand supply and demand. What does that even mean? It's areas of concentrated buyers and sellers. Again, now think about, you got buyers. They purchase at a price. We'll go into this a little bit more, but they purchase at a price. And that could also, but also remember, you have sellers who, if they've taken a profit, if this is going to be profitable for them, they can also buy. To get up a trade, a seller has to buy, and if to get in a trade, a buyer has to buy. So you could have both sellers and buyers in the same area trying to, for example, to buy. And so that's what a supply and demand zone is. It's a concentrated area with large contracts from institutional or smart money. We'll talk about those a little bit more. Understand that the institutional smart money guys, the big firms that trade hundreds and thousands of contracts, they run the market. So that's who is we're trying to follow those guys. So let me show you to the demand zone. Okay, it's just a large number of areas of traders willing to enter long or exit their short positions. So again, that's what we got down here. This is a demand zone. You could call this a supply zone, but we got a different screen. But this is a demand zone right here. The price comes down. Now again, picture yourself an institutional trader. You get to work, and they give you a certain number. You have, we want you to buy Persephone. We want you to buy 500,000 contracts of the NASDAQ or corn bellies or any of the FANG stocks, whatever it is, at this price area. So they have this number in their head. Now, if they put 500,000 orders in right then, number one, it probably wouldn't get filled. Number two, it would drive the price crazy out of the reach all of a sudden quickly. Okay, so they just get filled a little bit of time and it comes back down, filled a little bit of time, comes back down, gets filled a little time. So by the time they're into the trade for a while, and this is a year, almost 9 months of it. They've filled those contracts. Could just be over a 10-minute period, could be over a 10-day period, but they're buying these contracts at this place. Or this is a demand zone, but you have people let's say they had 100 million short orders and they bought up here, and every time it comes down here, they want to dump off to take profit. Now, if they dumped it off all at once, again, it pushes back up, but they have to buy at these areas. So that's all it is. I'm going on too long about that, but I just want to understand that's what happens. And this is supply zone, the same things. So you have them both in the same screen here. Your supply zone comes down here, people go short or people dump their trades, they exit that along, and it pushes the price down, bounces off of whatever's here, and then bounces through here. This is again the demand zone, help it hit into the supply zone, comes back down, fills more contracts. This is just shows you this is how the big institutional guys trade. Okay, they use so many advanced algorithms. They have a number in their head. They walk around, and it's a price that's acceptable for them to enter the trade. And then they keep buying that until they get their supply. Okay, now they've accumulated all their contracts, and the demand zone is just accumulation zone. There's another way you can say that, because they just hold that until that accumulation is complete. Okay, so supply zones, the same thing. It's opposite, just reversed. Okay, institutions, again, they use the algorithms, they know where the price is, they want to exit the trade. Or you have folks who are in a trade that went long that need to get out because they want to lock in their profit. So same thing, they're ready to sell at that, whether they get in there selling or they've purchased they've bought some and they need to get out. So supply zone is called the distribution zone. Again, I'll show it to you visually. This is accumulation zone. They pick up those contracts every time it hits this area. This is called the demand zone. Then the trend pushes up, but other people jump in there and pushes the price up here. And then they start distributing right here, or a supply zone. Okay, so just interchangeably, supply and demand, accumulation and distribution, reaccumulation, distribution, same thing. That's what controls the market. It's not us retailers with our 10, 20, 30 contracts, 5 contracts, 1 contract, whatever you're trading with, okay? But here's the reason why we want to use the supply and demand. Supply and demand zones are responsible for driving the markets. They're not worried, again, these institutional guys, they're not worried about these little few points that's going the wrong way. They're now behind 5, 10, 20 points. They don't care. They're doing what they're told to do, which is get this number of contracts or the number of stocks or how to pick up their options. They drive the market. They don't panic. They don't run away like we have to do we have to control our risk. I'm saying they don't have to worry about their risk. They can just put on more contracts. So this helps by following these guys, they're responsible for driving the market. If we can tell what they're doing, that will help us to make the money. Okay, so supply and demand zones help investors. They make the purchase and sell decisions. Just basically wait for it to go to a certain area, accumulation, distributions. So and that also determines liquidity levels. All right, so how could you keep track of this? Well, you could draw a bunch of lines. You could say, well, must have been a supply area. Must have been a demand area. A lot of traders, they start their day out, they get on the computer, they fire it up, they start just drawing these lines. So manually, you can draw all those lines you want, and you keep drawing those, and you get enough lines on the chart, something's going to stick. But that's how a lot of folks do. Okay, and there's nothing wrong with that. I mean, there's people that make a good living drawing these lines, and when it hits there, they go, oh, I know what's happening here. The big boys are going to start pushing it down, and it does or it doesn't, and they get in those trades based on that. And that's fine. We'll talk about that, but we'll talk about how to make this easier, obviously. But let's just give you some rules. Let's give you some meat on some bones here. Supply demand trading rules. Number 1, never trade against the supply and demand. Duh, right? Duh. Don't trade against the supply and demand levels. Those guys, you don't want to be going against the smart money. There's a reason they're called smart money, which means the retailers are called what? Dumb money, right? Yeah, that's the dumb money. So there's a reason they call it smart money. It's because they run the market based on supply and demand. We want to trade those. We want to trade with these guys or girls. You want to learn around the supply demand zone behavior. We want to work around those guys. The behavior is what we're looking for and what we can predict. And you want to adjust your stop losses and targets based on new supply demand zones. Okay, so this is some ways to trade this stuff. And so I want to show it to you. I want to show you what it looks like. So this is our indicator. Again, you can draw a bunch of lines here. They're all, can draw different colors, but what the supply and demand indicator here at BuySide Global, this is one of our most popular indicators we have, and you'll see why, because it shows when to get in, when to get out, where your stop should be, where your target should be. But let me quickly explain what you're looking at. So these rust colored boxes, these are the areas of where sellers are sitting at. There's a load of sell orders at this area here. These green color boxes are where there's some bunch of buy orders, okay? Bulls and bears, however you want to think about that, this is where the orders are sitting at. And this is calculated based on what's happening right now. It does grab information in the past, obviously, like this chart market would be over here. What's happening right now is right here. These guys aren't here anymore, but these guys are. These buyers are here right now. Would you well, and that you can take trades based on this information. So if this was happening, when this happened, I'll explain what you're looking at here. So here's the sellers, sellers on this area, and then this big large block of buyers came by. The price dipped into them and then pushed up because they got their orders filled, and that tends to push the market up. You even get a triangle here. You get a blue triangle saying, "Hey, go long," based on your rule base. If it fits your rule base, you could take a trade going into that. And then what happened? It came up here and hit these guys, bounced off a little bit, hit them again, bounced off again, eventually pushed through and looks like it destroyed these guys. In other words, all their orders were filled and the price continued to push up. That's never good for those guys. And then you came back down again. You get a pink going short. Now, why would you not want to get in a short right here? We'll talk more about that, but that is a bunch of buyers sitting here. You don't want to go short into some buyers because it's going to look what it did, push back and forth. Eventually, the sellers got enough orders and overcame those buyers, ate through those guys. Those guys disappeared, and it pushed down. So this chart pops up during your trading day, and do you think you could make decisions if you knew where the buyers and the sellers were at? Ask yourself, could you make a trading decision based on that? You'll see more of that. I just wanted to just show you that, okay? So now let's go over some trading rules. Again, you don't have to have this indicator to trade this, but if you can't see it, how are you going to trade this information? But so what we have is we call the inner boundaries. This is where the price is. So this is a buyer inner boundary, the top boundary, the top layer. You can think of it like an onion. The top layer is typically penetrate a little ways, but typically bounces off of it. The outer boundaries are the top or bottoms, however you look at that. Those seldom get pierced. And if they do, that's a good strategy to go the opposite direction, which we'll talk about that. I'll show you that, okay? So this is the supply and demand trading rules using those inner and outer boundaries. So just that, having that information alone, even if we didn't have triangles popped up, if we never learned anything more about the market, do you think knowing that the market typically penetrates a little ways and bounces off, do you think you could make some money making trading decisions using just knowing where these buyers and sellers are? I say yay, you can. There's plenty of trades to take based on just knowing that where these inner and outer boundaries are. That alone would be worth price of admission, but there's more obviously, okay? So here's a rule. The inner boundaries are always tested, touched, and even can be broken. That's a great trading rule. Knowing that, you can take trades based on that alone, okay? And we'll talk about some more rules in just a second. Here's another trading rule. Outer boundaries are always stronger, and once they're broken, that zone becomes invalid. Can you take some trades based on that? Yeah, check out over here. This thing has been tested this whole time. There's these buyers right here, and they kept getting hit. Finally, when that's penetrated, what can you expect to happen right over here? And what can you expect to happen when it exceeded back up through here? Okay, it failed. It didn't go all the way through much up through here, but that way you sure definitely could take a trade based on the path it's going to bounce off that. Okay, same thing up in here. Now, so it penetrated here, didn't go very far, didn't break the outer boundaries, but pushed back down. So again, that's a great little trading rule, okay? Now, let's do some trading strategies. Again, feel free to write this down, take a picture with your phone, whatever you want to do. If you have supply and demand information, you can use this. For every new supply and demand zone created, number one, you got to check the value range. This is stuff that you'll pick up quickly as you're doing this, but check the value range. Value range means basically, is there meat on the bones? Is there enough movement room here for a trade? You can check the zone height for zone strength. In other words, is this, I'm gonna go back to the screen before. I'm gonna go, is it, if it's a thin like this, guys, I wouldn't worry about these guys right here. I don't know if you guys can see this. I should have made my my indicator a little bit stronger, but these guys, I wouldn't worry so much about these guys. And it turns out it did. They bounced off them for a little bit, but then eventually got broken through. And if you were trading, swing trading, you wouldn't even blink about taking a long through these guys because you know they're going to get chewed up. There's just not a lot of them. These guys, much thicker, probably harder to get through those. That's a lot more orders you got to get through from 34, so 39.45, 25 to 39.47. That's a lot of meat on that bones. I wouldn't want to trade against that. So that's, again, that's what this strategy is just saying. Sorry, I skipped through a couple of those. You want to check the height zone for strength, okay? And know where your stop loss is. We'll go over that, okay? Calculate your risk versus reward. Is it worth taking that risk and place the trade, manage the trade? This all has nothing to do with BuySide Global specifically. If you know some supply and demand information, you can use this to make trading decisions. Let me show you how to use the indicator though. For example, you want to use the value range. So the value range is the distance between where it's at. So the price comes out right here, came off of these sellers, okay? There's a triangle popped up, but you as a human have to make a decision. Hey, there's enough room on here? I call that meat on the bones. Enough room to make a decision that's going to make it worth my getting in a trade for. If the buyers were right here, I'm not going to buy into that. I'm not going to short into some buyers. But then also notice you put your stop here because why? Why is that a good place for a stop? I pause dramatically like I'm going to hear an answer. I'm sitting here in my house by myself. The stop goes up here because for you to be wrong, it would have to reverse, go the opposite direction it's heading, eat through every one of these guys, have to get their order picked up and filled, and then it has to continue up, and then it's going to get you out. Versus what's typically going to happen is it's bounced off these guys, and the price is pushing down. Guys and gals, I don't mean to misgender anybody, pushing down through here and hit your target. Why is your target up here, not inside here, down here? Because these zones get broken, but not penetrated very often. So you could, yes, you could move this down in here or even trail stop, but that you're going to be bouncing here for a while. Might as well just take some target, take a profit, and get another trade later. Okay, so this is what you do. This is visual. This is what you're looking at doing. Let me show you a different trade on that as well. Let me show the exact same thing we're doing. So again, this is a long. You get the long trade signal. You make a decision. The value height, is this a good? Is there some space here? As long as no sellers pop up in, yeah, you want to go long there. You put your stop here. Again, why? Because it's going to have to chew through all these orders to get to you. And it's going to probably much more likely it's going to go up here to where these sellers are at. And then it's going to juke around here. Now, look, it did finish pushing up, but that's, you didn't know that at the time. Just again, I'd rather harvest, put some in the pocket. You can always get another trade. Now you have somebody else's money to trade with. So that's how you manage the risk with this BuySide Global Supply and Demand Indicator. All right. Now, again, the same thing happens, same thing on a short. You get the short signal, you look, make a decision. Is there enough room there? Put my stop here and down here, target right here. You can trail stop if you want as well, but you want to put something in the basket the first time. This could be your first couple contracts, and you can trail stop, try and get a runner if you want. All right, so now strategy number two. Now that you've seen that, you can see another way to, again, you take a picture with this with your phone if you want, write this down. You want to enter when the price bounces off a stronger zone. Okay, I'll show you what that means, but let me kind of go through that. So you can, another way to trade this is with just having a bounce, all right? So you want to check the value range again. You check the height for zone strength. You know your stop loss is going to be at the target levels, okay? Again, our indicator helps with that, of course. And you calculate the risks and rewards, and then you place a trade and manage that trade. Let me show you what I'm talking about. The price came up here, hit there, penetrated. You know typically it's not going to make it all the way through here because you've seen it over and over again. This band is thick. It's a lot of committed sellers. They're getting their orders filled, which means the price is going to be pushing down. There's no reason not to put a sell order right here. at the when it breaks back through. So when it comes back down through, it's going to come juking down here. There's enough room. You put your stop up here because it's going to have to go for you to be wrong at this trade. It's going to have to eat up every one of these guys' orders and then hit your stop. And to be right, all it's got to do is get down through this clear air and hit your target. Okay, so that's the bouncing. Okay, that's strategy number 2. Strategy number 3 is you want to trade on the micro trends. Now these happen. You saw those blue triangles. I'll show you what we're talking about here. But these happen that let you know there's hey, this might be a trending day. Everyone loves those long trending trades when it turns in there's 2 points, then there's 5 points, turns into a 10-point day, and then now there's a 25-point day. Those don't happen every minute of every day, but when they do happen, it's nice to have a heads up, right? You'd love to know that there's a big 3-hour trending where it's going to offer 40 points. That's what makes for a good day, makes for a good week. But these micro trend signals, the early signals, if you had a little bit of early heads up at that, that would be nice. It'd be nice to be able to trade that way. So what you want to do is get at least 2 continuous supply zone formations. Well, I'll show you what that means, or demand zones. And you want to build the new zones are not far from each other, and they don't overlay each other. Let me show you what we're talking about. You get these signals basically. You get 2 in a row. So here's 2 blues in a row. There's distance between the top of them. They're not overlaid. See how these 2 are overlaid each other. These 2 are overlaid each other. Yeah, that's not a valid signal. But these 2, they pop up. There's some distance. The price moves up. Another group of buyers pops on the screen, gets another long indicator, and now you're thinking, hey, today may be a day to get in long. We're gonna have maybe a little trend day for another next hour. And look what it does. Pops up, pulls back, pops up, hits off those guys. Just a trending day. Thank you, all institutional traders who continue to make that go for you. Again, I want to show you what's happening. These guys who are in short could have made a little profit right there, but then at some point along here, they had to buy because they're losing their minds and push the market up even farther, up into these guys. And that's I'm assuming is what happened. But what a great little trend that would have been. And it started off by you seeing these two triangles in a row, 2 more triangles in a row, not in a row, not in a row, not in a row. Those weren't trends. Okay, that's pretty simple. You could probably train a monkey to take those trades. Okay, so that's nice. Now another one here, got 2 more in a row. So this is your day unfolding. There's a pink, and you could take these trades. Again, this trade would have been a good trade. Get in this thing. You got some distance. There's your stop. Here's your target, and then it hits and bounces off like it always does. Blue and pink, blue and pink. You see those different colors, but then something happens. Boom, you get this pink, and then you have this off this signal, off these guys, these sellers. Then it moves down. There's some distance. There's another signal. There's some distance enough on there. This matches your description of a little bit micro trend, and you get in and follow that thing down. You get more confirmation, till what happens? Some buyers step in down here, push the price up. Your trend's over. As soon as you see that blue triangle, you probably think your trend's probably over. Again, here's another one. Sorry. There's another one. Oh, I went forward instead of backwards. Okay, so again, here's another one. You get 4 or 5 in a row. And yeah, it doesn't last. We call it micro trend. So this is, 12:35. You got in 12:40. It didn't last forever. There's an hour, but that's a nice little micro trend. Okay, and now this isn't a micro trend. Why wouldn't you want to take these 2? Again, if I was my school classroom, I would make you raise your hand and tell me why this is fit the profile, because these are on top. So we're looking at short signals. We have 2 pinks, but why isn't it a signal? Because this stack of sellers is right on top of this stack of sellers. Okay, same thing with these. Look over here. There's 2 blue micro trend signals, but this represents these guys, and this represents these represent these folks. This represents those folks that stacked right on top of each other. So those are not a good micro trends. Okay. And so you don't want to get those. So you want to watch for those. So you have to filter a little. There's a little bit of filtering going on in your head. You have to make a decision to do that. But again, plenty of meat on the bones if you wanted to go bounce off this and take a long, even though you didn't get a blue triangle there. Okay. Not seeing any questions point up. Again, want to let you know we have, like I said, there's an offer coming up, but there's a spot on the buy side, sorry, on the go to meeting chat room, or sorry, control panel, there's a place for it. Not necessarily in the chat. I don't have the chat open, but the questions panel is open up, and I'm looking at that every once in a while. And we have other people ready to answer questions there as well. Okay, so that's what a microtrend isn't. You can see that. In fact, now here's another third strategy. Again, this is just you. Hey, from me to you, as a trader to trader, if you have some supply and demand indicators information, you can use this strategy. This doesn't, you don't need to set a target. Okay, it's probably going to break the zone and tend to go farther. Let me show you what I'm talking about. This. Okay, so this is strategy number 3. This is the it's going to break through that zone, okay, and continue to push up. So notice how once it breaks the top of a zone, you could take that trade. It breaks to the top of that zone, take that trade. And same thing, when it breaks through the bottom of this one, take that trade. It just means once it breaks out of that thing, there's a good chance whether you get the signal or not. It's another strategy, another way to take that trade and continue pushing down. Okay. So again, once the band or the areas of accumulation and distribution have broken, there's a good chance it's going to go for broke. Okay, that's another third trading strategy you can use for that. Again, let me show you another thing. The nice thing about this is we recommend using the BuySide global order flow zones for this. That's a different indicator we have. You'll see that. You just want to. There's a reason I'm bringing this up, but I want you to show the difference. So this is just a regular. These are regular candles. You know, if it closes higher than it opened up, it's green. Closes higher than it opens, it's green. If it closes lower than it opened, it's red. So that's just a regular candle. This is the candles from our BuySide global order flow zones. Okay, and what it does is it lets you know who's winning. Is the buyers or sellers? Is the bears or bulls are winning? Inside each candle, the red indicates obviously the red indicates the bears won. Okay, or the sellers won. In overall the order flow, the bears win that one. And then when it's yellow, it means there's basically a tie. Statistically speaking, it's a tie. Okay, and blue, you can imagine, means that the bulls won the order flow war. Neutral order flow, the bears lost that one. We got bulls all the way through there. So what you can do, again, taking a trade based on just order flow through where it's at, as it comes up above the break, so the band down here is not broken. It bounces off that and heads back up. All these orders get filled. Your order flow zone turns blue, and you can follow this trade all the way up here. You got a little caution. You're like, okay, I got to watch my stop, and then continues to push up, and you don't get out of this trade until you see a red candle. Even these cautious guys are still closing higher than they're opened, and then you finally see a red candle over here and get out of that trade. Okay, that's a great trade. Now let me just go back and show you how that would look. If I was just trading off this, I would go up here and I'd put my target right here. That's where my target's supposed to go. My stop would go down here. My target's here. I'd get hit. I'd be happy with that trade. But look how much money I left on the table. Or look what I would have done if I had waited for a red candle right there. I would have lost. You're not losing. You're still making some money, but you would have got out of this trade so much sooner based on this, versus if you had the BuySide global order flow zones indicator combined with your trading your supply and demand indicator. How much more meat is on these bones? So let's leave this on here and you get up here and get into these guys. I'd love to see it go up through here. It didn't. You had to get stopped out at some point, but there it goes. That's strategy number 3. So that right there. Oh, let me ask you these questions here. Looks like in real time. Yeah, hopefully I don't know if we have time to show you in real time, but in real time, yeah, these print at the end. So you'd have at the end, you'd be at the end edge of right there. So there'd be like that would be real time if we were. I don't know if I'm making myself make sense. There'd be these guys here, and these guys up here, and these guys up here and below. So you can see at the edge of you're at the edge of everything, and then it reprints every time the candle. If it's a minute chart, it reprints at the end of every minute, and shows you where the new guys are coming in at. And if there's a new bunch of orders that pops up, they pop up and it's populated right there wherever they're at. Okay. So how far ahead the current trades when we see the order flow zones? It doesn't show you before. It just you're in the trade, and it's creating that candle. During the candle formation, it doesn't give you the blue until it's closed. So if this was a 30-second chart, it would only take 30 seconds to decide whether this is blue, red, or yellow, and then a new one would start forming. The new forming one wouldn't be red until it closed, and they decided to determine whether the buyers had won out or the sellers won out. I hope that answered your question. And are the zones based on order flow? Yes, yeah. And I don't know what the percentage is. That's a good question, but yeah. So, and if you and here's the other thing I'm going to offer really quickly. We're going to talk about the offer, but just let me throw something else in before I forget. If you purchase any of our products, we're going to give you access to our trading room, a small group of traders. We trade about a half hour before the open, about 15-20 minutes after the open. We're there to help. If you're saying, hey, I'm having struggles, these aren't profitable for me for whatever reason, we can help you figure out what the problem is. We're going to give you access to that as well. So I'm going to throw that in there before I forget, though you'll have access to our trading room. So if you're having problems with the software, or just in general and taking trades and understanding the software, we're going to be able to help you by having you get in the room in the mornings. It's just a few of us. It's not like 10,000 people. It's just a group of folks we can chat back and forth. A couple professional traders, and then the folks in the room that have questions. And sometimes we have questions as well. So, I love having the room because, number one, it helps me be a better trader more, because people are watching my trade. I'm going to try and be more serious about taking a good trade rather than just taking one of my usual boredom trades. I can't wait for something to happen. Maybe I'll go away. So, and then there's people, hey Dave, don't forget there's news in 5 minutes, or you're talking through this. You're talking through the opening here. Be careful. So let's get to the meat of the heart right here. The BuySide Global Supply and Demand Trading Bot. Okay, this 2.0, 100% automatic trading. Now, you know how I went back? We had 3 strategies, and we had rules, and we had, which are good. Those are great. Those are. I stand behind every one of those. But those are a lot to keep in your head. Oh, do I have enough value? Do I have enough? Is there the supply zone pretty thick on this? Should I take this trade? Oh, I got to move my stop to the top. So there's a lot to think about. Doesn't mean you can't do it. A lot of people use it and do it every day. But I want you to understand that all strategies, all rules, everything we've talked about so far is incorporated into the BuySide Global Supply Demand Trading Bot. All the strategies, entries, exits, targets, all this stuff is done at the speed of light with no emotion. And why is that important? Well, let's talk about that. Trading bots are, let me explain what it is. Trading bots are software programs. They automate the entire trading strategy, right? They automate, it's all automated. Everything, you put a trading strategy into it and it pulls the trigger, boom. And it's not just automated simple buys and sells. It's not just, hey, buy and sell. There's a market scan before a trade. It's complete. It's always on, looking for the scanning the markets. It's looking for signals, and it's going to filter out the noises, and it can execute things lightning fast. So that's one of the really nice things about that thing. Okay, so I want you to kind of be aware of that. So it's not just not just, hey, buy and sell. Okay, it's doing the market scans. All right, and so here's why it's better. Okay, this is just humans. This is me included. We possible trade entries. How many times have you thought you should take a trade, but you had to check something else, and by the time you came back to it, yeah, now it looks even worse. The trades maybe you shouldn't have got in, or maybe you wanted to get in, but now it's too late. It would have hit your stop, or the market's already moved, or you're too slow. You had to go through, look at some filters. Well, let me check my 5 minutes, see if I'm okay with that, or let me look against this other possible SMA, or let me look at my another filter, that MACD is saying no. Okay, we're too slow to calculate those targets and stop and loss, and figure out where stuff up. We're really slow. It's just a lot of we have to think about this stuff. and you're slow to pull the trigger, and you place a trade. And by the time you filter through all that stuff and to make a trading decision, it's already moved on. Okay, and if it's going to come back a little bit, it's going to hit your stop because you waited too long, or you're just too emotional. You took two losses. Should you even be trading at all? Oh my gosh, I shouldn't. Even though here's the perfect setup. This is what I was waiting for, but I got to follow my rules. So if it means if I take two losses, I can't take any more, and now you miss that great trade. All right, that happens. How many times does that happen? You're too emotional to make this full into trading decision. Okay. All right. So this is why you guys go, we're too slow. By the time you act out, the trade is already gone. If you enter too late, chances are you're going to get a losing trade, not maybe because it's a losing direction. It's just because the trade, you know how the market ticks around, 3 or 4 ticks, 4 or 5 ticks, 8, 9, 10 ticks. It's going to come back and hit your stop. Whereas if you got in the trade when you should have, it wouldn't hit your stop and would continue, pulled back a little ways and then would continue moving on. Okay. And if your trading strategy is profitable, how many of you guys do this? You decide to sacrifice. Oh, I had a 2-point target, but man, I'm just nervous. I'm going to pull out and get 1 tick. I'm going to just give me anything. Just get me out of this dang trade. What am I even doing here? How many times does that happen? Whereas if it's your execution mistakes lead to losing trades. How many times does that happen to make sure that you're losing money because of why? Not because of your machine, not because of the market, not because of the economy, but because you're making trading mistakes. Okay, and that's why you should always trade with a trading bot. Okay, if you're trading manual, do you know what your trading strategy is? Do you have it? Is it written down somewhere? Is it profitable? Is it repeatable? Is it working in choppy markets? Does it only work if trending? Did you just is it only one setup you could do that happens every couple of days? Okay, you can do the bot to run back testing on your trading strategy. You can adjust your trading strategy with the bot, and you can rerun the back testing. You can say, oh, okay, that's my back test. Here's my results. Let me tweak a few things and let's run it again. Okay, you can create multiple variations, the same trading strategies. You can have a variation that you pull up. Oh, it looks like it's gonna be trending today. I'm gonna use my trending day bot. Looks like it's a trending down. I'm gonna use a different trending down bot than I am for my trending up bots, for my flat days, for my volatile days. Okay, there's all kinds of ways you can just adjust this machine. That's you, that's trading you. Okay. Okay. Now this is important because I need to filter some folks out. We need to understand that this isn't for everybody. Okay. I want you to understand that this isn't, if you want to buy, if you've never heard about trading before, but you've been interested in it, you've heard about trading, but you've never done it before and you're interested in it, but you don't want to learn how to trade. You just want a machine that you can plug in and have it, make money for you, come back to a big pile of money shooting out of your ATM machine on your desk. This is not for you. Okay. It's not for folks who, just don't want to put anything into this. All right. Without having to learn how to trade or take some, what trading is. It's an automation tool, not an ATM machine. Okay. If you're looking for software that you can turn and go on vacation, just let that thing run 24/7, let it run for 2 weeks, come back again. That's not what it is. Okay. This will get you into your kind of trades, but with the speed of light. It will make your trading decisions, but at the speed of light. Can you see the difference? It's going to take your trades without emotions, panic, or regret. This should be an extension of your trading. So that's why I'm saying, like, if you've never taken a trade before, learn how to trade first. At least learn the basics in and outs of taking a trade. You don't have to. I'm not saying you have to lose your first $10,000. I'm saying you need to learn to see what you're kind of doing with the market. You learn to work around. For example, what do you do at opening? If you know about the opening of the market every morning, you know that maybe that's not a great time to jump in. If you don't know that, you need to learn that first, and then you're gonna be able to know why you shouldn't use your bot now the opening. Okay, so it should be an extension of your trading. I hope that makes sense for that. All right, let's get to the powerful way to trade is to use this bot as an extension of you. Make yourself a machine is basically what we're trying to make you do. You pick a trading strategy. I've given you 3 today. There's more, but you can pick one that you can understand very well and you can learn when to enter using a trading strategy. You can use the filter strategies to know when to ignore your trading strategy. Again, this is all for the bot as well. And always know your expected target and stop loss levels. And you can back test that using your bot. So you need to have I want you to understand that you should have a strategy. Now, the strategies are built in. You can use those from the bot, but I want you to know which ones you're using, what's your expectation, what you're looking for in this, okay? That's why it's a powerful way to trade. You can save those bot settings and use those. How'd you like to just, it's like a gear shift on a car. You can just switch to different things that are happening, different conditions, okay? And obviously we want you to trade live or on sim for a while to confirm what you're doing. Anytime you do this, now I'm talking about even 6 months from now, if you say, you know what, I want to get into, I'm going to trade, I'm picking something out of the, I'm going to trade Ethereum. Well, please trade that on use the bot if you want, but trade that on sim for a while before you turn it loose. That's all. It just makes sense, okay? And then eventually the thing would be to do is just stop trading, um, manually and just do only with the bot. And then now you've taken the bad part about humans, our slow reaction time and our fear out of the market and out of your trading and just left what's great, which is your strategy able to execute instantly. Okay. Don't let your emotions stand in the way. Okay. Let the bot do the trading side. Just do all the trading for you. Okay. So here's the trading bot. Here's the bot. So those three strategies we just talked about, I don't know if you could spot them, let alone remember what they are. Do you remember what those things are we talked about? And we talked the micro trend and the bounce off those things, and when the order flow changes. Okay, but could you spot those on a chart quickly? Your bot can. Your bot can. Your bot knows those strategies are happening right when they're happening and can pull the trigger on those things. Okay. It can scan that continually for all three strategies. It says seconds, but it's really microseconds. You have to understand that. Okay, it can do all that. How fast can you calculate the value range, the zone? Where you put your stop? Where do you put what's the risk reward right now? Should I even pull the trigger or shouldn't I? And bot can do this before it's too late. Again, microseconds, and place that trade if it satisfies your criteria that you've built in. And when I say built in, please understand, you don't have to program this thing. You don't have to be have to write code, okay? You just, there's a few check boxes that easy peasy way to do this to make it fit you what your style is. That's all we're saying that, okay? All right. How fast can you close the trades? Okay. The bot can cross-check the trend order flow zones. It can get information from our other indicators. Okay, the trailing stop indicator, anything, whatever, it can close it quickly, much faster than you can. You know how you just like, oh, I think it's gonna come back, but maybe it's not. Oh, yeah, it did, and you lost a couple points just waiting that. Okay, and just quickly, I don't want to get into the details so much right here, but the bot has a break even fast settings. In other words, you can tell it, hey, as soon as this thing breaks even, move my stop to break even as quick as you can. It's faster than I can, and I'm pretty quick about that. But this is the bot is now it's a free trade. Even if it comes back and gets you, you pay commission. That's it. And so the bot is faster than humanly possible reactions possible to get you out of bad trades. All right. Okay, so can you focus on the charts for 8 hours? Would you even want to sit in front of a couple screens for 8 hours over and over again? The bot can. The bot doesn't ever get tired, doesn't take breaks, doesn't complain, doesn't need to get up and stretch, doesn't need to go to the water cooler, doesn't crave other human company. Your bot can. All right, that's something to think about. Okay, let's get to the meat potatoes here, what we're talking about here. So for this trading bot, okay, if you came in to our website earlier today, I mean, I think maybe it was yesterday it was offered, or if in a couple days from now or a week from now, and you wanted this great product, you're gonna have to shell out $2,500. Okay, it's $24.99, but $2,500, and that's a yearly subscription. We want to be able to update it and make sure you have the best. The market changes. We got to make this changes with you. But so it's $2,500 per year, and that's a great offer. That's a great machine to have. Do you think if you were a businessman out there, you pick any business you could have, you refill fire extinguishers for people. If someone gave you a machine, if someone gave you if something cost $2,500 per year, but could make you, I don't want to make extreme claims, but make you great money every day in and out of, and remove that emotional part. Do you think they'd buy that? You know they would. $2,500 a year is nothing for a business tool that you can use to make money. Okay, here's what you get though. So you get three indicators: the supply and demand, order flow zones, and the trailing stop indicators. Those are our three top selling indicators that I can't trade without. So if for some reason I wasn't the lead trader here at BuySide Global, I would be happy shell out that money. Okay, but because you're here, this is what I was talking about. This is ridiculous. They're offering for you guys. So here's what we can do to make this easy for you, because sometimes, you know, $2,500 isn't easy to go to the spouse and say, hey, I need to write a check for $2,500 for this tool. Okay, when you go to this website, you can see that global.com. Again, maybe take a picture of this. Okay, this is open for just the folks that have sat through here this with me. Okay, this is we call this the monthly plan, that this is open for a little while. So you put $500 down today, right now, whatever. You go to the website, put $500 down, and then it's $199 per month. Okay, and let me explain what's happening. Again, if you come in 2 days from now and purchase our bot because it's an amazing product, you're going to pay $2,500, and that's going to last you 1 year. And then at the end of that year, you're going to have to pay another $2,500. Okay, so there's going to be a renewal fee anyway. Well, if you pay $199 a month, that's $2,300, and after you pay that out of a year, so $199 per month, excuse me, pops out about $23.88. All right, and then it's going to be time to renew again anyway, and so you'll be paying another, you know, $199 per month if you continue to renew it. And I am telling you, you're going to want to renew this. Okay, to let this thing run for a while and pay for itself, and then start making that trader money we're talking about, that everybody's talking about. Okay, so that's the offer. Now, as far as I know you're thinking too big. Well, let me go over this value. So the trading bot, you get $2,500 trading bot. You get three indicators, both worth $500 a piece, but you get that for that $495 down, $500 down. And by the way, that's just 10 points on the ES. That'll be available tomorrow in our trading room. Something to think about. And that would get you in the monthly plan, and then you get a couple $100. You know, that's 4 points on the ES. You got a whole month to get 4 points. You really got to look at this as an investment in yourself. Okay, is $200 a month worth an investment in yourself? Absolutely. If that's 4 points on the ES, it needs to help you get 4 more additional points on the ES. Do you think it could do that? Absolutely. You've got 3 trading strategies. You just from the balance alone, you could scalp 3 or 4 ticks a day for that. Okay, and so this is another thing I think it's amazing too. This is gonna be the love it or exchange it. Okay, so 30 days from the purchase. If you're, for example, they're saying that, hey, that trailing stop isn't great. I know Dave loves it. I know they love it in the trading room, but gosh, it's just not for me. We're gonna exchange it with something else that will put our whole panacea of sorry, I don't know if panacea is the right word, but a whole plethora of indicators out there for you to pick and choose from and swap. But we're gonna make you happy. That's what I'm really proud about. That is because there's as many ways to trade as there are traders. And so not everybody's going to fit the way I like to trade, and love the order flow zones, love the supply and demand, love the trailing stop indicator, love the bot. Not everybody's like that. So, but we want to make you happy. So you can relax about, what if I don't like it? Well, you're going to love it or exchange it. Okay. So there is the price is not there. It's only available till tomorrow. There's the link right there. Take a picture with your phone. You can write that down. Whatever you need to do, pull that thing, pull the trigger on this, get that deal. It's an investment in yourself. You want a shoe shine business, you got to put an investment in yourself. You got to buy some polish, you got to buy some brushes, got to make you a little box. Okay, you sell lemonades, cups, ice, lemonade mix, water. I've been there. I've done that. I haven't done a shoe shine business. I sold Christmas cards. I had to put investment in myself. I had to buy the cards. I didn't spend time on my bicycle going knocking on doors. I had to put an investment in there. You're going to have to put investment down. 500. Look, so $500 isn't. I'm not trying to minimize $500, but you can spend $500 on a family dinner easily. you can spend 500 bucks on their new next. I guarantee whoever's listening to this, your new next toy you buy will be close to $500. Two pairs of running shoes and you got there's $500. Okay, take advantage of this offer. Get now. Let me explain what you get. You get, and I'm wrapping things up here. You're going to get those 3 indicators. You're going to get the bot. You're going to get access to us via the trading room. If you need more access than that, you're going to have access to us. So I'll get on the phone with you and spend time. Hey, let's show how this is running. Let's try this. I would love to just say, here's the settings to use. Here's the time frame. Here's the market. But everybody's a little different. So everybody's settings are a little different. So there isn't just one size fit all. This is custom made, and you can customize it to fit you. So I don't want to say, hey, this is what it's got to fit. But that is basically what I wanted to show you guys. I wanted to give you clear, concise information. I wanted to give you some good tips just on how trading should go in general. And I wanted to give you a great offer about a great product. And now I gave you a great offer on 4 great products. Okay. And we want we want this to fit your trading style. So we're going to let you, make it work for you and you have access to getting more information. So let's see, I'm going through, I don't see any questions I don't think have been not answered. We appreciate everybody that's helped us in the room as well. I'm not seeing any question I don't think has been order zones, supply and demand. Yeah. Appreciate you guys. I think if you haven't got so let me say this. If you're on the fence, if you're not sure, if you have a question I haven't answered you, shoot an email, info@buysideglobal.com, right there on the screen. We'll get that answered as quick as we can and send that back to you. Okay. Any other questions you guys have? I'm not seeing anything else. I don't see anything, other comments. I don't want to take more of your time. We said we'd be here about an hour. But yeah, I think you're asking me the live trading. Yeah, absolutely. Okay. The live trading, we live trade in the room, and you can see our screens, you can see our trades. We talk about those again. We're not there. I'm not there to call out trades. I'm not there to get whether people take a trade based on what I'm saying or what. Matt's in the room. Matt, I don't know if you want to say hey. Matt's the other professional trader we've got with us. Let me see if I can unmute his mic and you just say hey. Just human error. And he's not. I don't see. He might be.
All right, we got
there it. There he is. Hey, Matt. Hey.
I didn't know how many times I could click the button.
Yeah. Well, it could have been me too. So this is, folks. This is Matt. He's the professional trader in our room with us in the morning. Matt, anything you wanted to say about anything you've seen today, or questions you might have, or I just wanted to kind of give you the final say, and we'll close this up.
Yeah, so the only thing I would say is, with regard to the trading room, Dave and I are there every day, provided we're not taking vacation or need a day off here and there. But we're there in the room every day. When what we do is in real time, we kind of talk through what it is we're looking for, and it's all manual trading. So we're not there to talk about automated strategies. What we are there to do is talk about what we look for, and what the mentality is of, okay, I'm seeing this, I'm thinking reactive trade off of this level, or I'm seeing this from the indicator, so I'm thinking of taking a long or short, kind of whatever we see. But the more important piece to that is really how we are setting up for the trade mentally, what we're looking for as far as risk levels, where we want our risk to be, and how we manage that live. So and we talk through it. I mean, some of the times we'll go silent because obviously we're like every other human out there, where we're concentrating on our risk, on the trade, and at the same time trying to provide commentary on what we're seeing and what we're thinking. But but that's, yeah, that's effectively what we do. And obviously we take questions. We encourage people that are in the room to ask us questions, whether it is about the indicator, whether it is about why we took a trade, what we saw at that moment. And oftentimes it's split second. I mean, I can go back to today's trading and say, I was actually looking at potentially going long, and I flipped that in an instant, and we talked through why I flipped and went short as opposed to going long.
Yeah.
It's a place for us to learn. It's a place for us
Yep.
to bounce ideas and talk about and talk through our trades and kind of what we're seeing for setups and how we see it and then how we trade it.
Perfect. Hey, thanks, Matt. Did I unmute myself?
Yes, yeah, you're good.
Okay,
Yeah,
make sure.
yep, yep.
Make sure. This little cough has been bothering me here. And then somebody's asked me about access to trading room. Yeah, once you make that purchase, you'll get an email with a link to us, and you'll have access to us all day long. And again, and I've got. Oh man, thank you, Robert. There's a no extra charge for the trading room. Again, that's part of our service here. You purchase this, you spent good money on a great product, you got good value, but we also want to add a little bit more value to that and give the trading room. So once you become a member of our family by buying something, you have access to our trading room. And it was really nice. Robert has been there a lot. Probably every day. I don't take a role in the room, but he did say I had the trading room is great. So appreciate that you saying that. So and if you did purchase, you didn't get the link yet, I'll make sure you get that, or shoot me an email, info@buysideglobal.com. We'll make sure you get that link over there. So looking forward to all you guys. Now, all the folks in the sound of my voice, again, this to me, if this $500 down and the 190 bucks is not something you want to participate in, feel fine. Purchase a great indicator like the supply and demand indicator and take trades with us in the room. And that's 500 bucks. There's no additional cost on that. That's something to think about as well. And then as you make money using these indicators, you can now afford to buy that bot as you want to. So we do mostly futures, but we also keep an eye on stocks in the trading room. So there's a lot of talk about both. But you want, like I said, most of the trades we take right are on, and that's because most of our family uses just the futures for various reasons on that. So, all right, I'm not seeing much more questions in. Again, thank you, Matt. Thank you, our
You
team that have
got
been
it.
helping answer questions. I'm going to close down the webinar. Appreciate you guys taking time out of your day being here, and we'll let everybody go. Have a great rest of your day.
Bye,
And thanks
everybody.
again. Thanks for the comments. All right, thanks, guys. Bye-bye.